Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, stocks climbing after the latest economic data showed the economy is holding up while still leaving the door open for the Fed to cut rates a few times this year. Bonds, little change though on this data. Let's get to the story with Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist. He joins us from Princeton, New Jersey. This PCE data that we got, Ira, largely in line with expectations. Does it change any of the moves from the Federal Reserve come September and later this year?
Well, I think it doesn't take 50 basis points off the table, but I think just given the whole mosaic of the data that this report gives us between income, spending, as well as the 2.5%-ish core PCE and headline PCE numbers on a year-on-year basis, that it makes it, I think, a 50 basis point cut as an initial cut a little bit less likely, particularly when you look at some of the spending data, because the spending data is suggesting that the consumer is still willing to spend, and you look at some of the sectors, and I was just actually taking a look at services and durable goods and the like, and durable goods sales really plummeted last year, but those have come back and are still growing at around a 4% year-on-year growth rate. So the consumer is still holding up the economy right now, and unless that changes meaningfully, I suspect that the Federal Reserve will move cautiously, but I do expect that they'll cut interest rates, but maybe not 100 basis points this year, maybe 75, which again isn't a massive change, but I think that this data, points to the soft landing being more probable than it was before we saw it.
Ira, I'm always curious about, in terms of Fed policy, 25 basis points versus 50. Is it better to kind of spoon feed slowly when you're shifting in cycle, when monetary cycle is shifting? Is it better for markets, investors, and the economy, or is it better to kind of give it a jolt like 50?
Well, typically, the Federal Reserve is cutting interest rates during some kind of crisis or massive downturn, or when there's some kind of exogenous shock that occurs that might make the economy really slip into recession very quickly. That is not the situation, right? So this is different than most other cycles that we've seen over the past 40 years. And because of that, I think there's some people who say, oh, well, they'll cut 50 because they're behind the curve when you look at some data. But then you look at the data that we saw today from July, right, which is the first read on how third quarter GDP and the like are shaping up. And it was decent, not spectacular or anything, certainly not like it was a year or 18 months ago, but definitely a decent number. So Carol, to your point, I think, them going slow to start, and then if the economy does slow down more significantly, they can cut more later. I think that they'll be more cautious than not. And that's one of the ways that I differ from some of our colleagues over at Bloomberg Economics. But nonetheless, like the Federal Reserve is in easing mode. They're going to be easing. Inflation at 2.5%, core inflation at 2.5% is close enough to their target that I think that they're comfortable to start easing monetary policy now.
Well, just in the last 11 minutes, we got consumer sentiment data. It showed that it improved in August for the first time in 5 months. Slower inflation and prospects for the Fed interest rate cuts helped lift expectations about personal finances. Ira, consumers expect prices are going to climb at an annual rate of 2.8% over the next year, down from 2.9% expected last month, and the lowest since the end of 2020. The data out Friday showed. Again, good news for the Fed.
Yeah, so certainly, the Federal Reserve looks at expectations for inflation as part of its analysis of what it needs to do with monetary policy, and certainly consumer expectations, like the Michigan inflation expectations component, is one of those, along with the market. Now, when you look at the TIPS market, and we put out a note about this last week, looking at the TIPS market and what it's been pricing, and it's pricing basically 2% inflation for the next decade. Now, tips haven't been the greatest of indicators of where inflation is going to go. And in fact, if you had actually bought tips and tips break even, so the inflation rate that the market expects back in 2021 when inflation started to go up, you would have made a killing because the inflation was meaningfully higher than what the market was pricing. But nonetheless, like at this point, most inflation indicators, forward inflation indicators, are moderating somewhat, and because of that, I think it's another reason why the Fed isn't concerned about a reacceleration of inflation at this point.
All right, so check. The Fed's got to feel pretty good about where inflation is, dare I say Goldilocks. But the one thing I am concerned about, and I know you watch it as well, is the jobs market. And we get another read, of course, the monthly report just about a week or so from now, or a week from now, I should say. Having said that, Tim and I have conversations with people saying that that they're finding it's harder for people to find jobs, or they're getting a lot more job applications. Just 20, 30 seconds. Should we be a little worried about the job market? Real quickly.
Yeah, I think so. And certainly the Fed has pivoted that way. Jay Powell was absolutely unequivocal about that last week. A year ago, we were only worried about inflation. Now the dual mandate is back in play. So any weakness in the job market will make the Federal Reserve worry that the economy is slipping and therefore will cut interest rates.
All right, Ira, thank you so much. Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey joining us from Princeton, New Jersey.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, back to Intel we go. We mentioned it. We talked about it with Carmen Reinecke. What's going on with the stock? It's up more than 7% in today's session. It's a top gainer in the S&P and the NASDAQ 100. So let's talk about the news that really, we thought it was going to be a sleepy Friday. Not even close. So with us is Ryan Gould. He's Bloomberg Deals Reporter on Intel weighing a bunch of options. So Bloomberg exclusive, kudos to you guys. So talk a little bit more about what they're considering and what this means. Is this a good thing, bad thing, or we still don't know?
Carol, I think it's the biggest story in tech generally right now. I think if you look across the board, and you've seen the reaction today with the stock, I think Intel's obviously up. Semiconductors in general are up. I think Broadcom was almost up 4%. This is a name that is being closely watched. There's been some commentary, and as we've been speaking to sources around this idea that Intel is too big to fail. Getting back to what happened in 08, this is almost getting to that territory. This is a big name for sort of national security almost for the United States. Intel itself accounts for 41% of US 300 millimeter wafer production. So this is a name that really is
meaning we need Intel to be a healthy company. We need a domestic massive semi company.
Indeed, and I think that's what's at the top of all of this. And so the pressure on Gelsinger is enormous.
But it's a lot less massive than it's been in the past at this point, especially after this year's stock decline. So Ryan, let's talk a little bit about what the options are from. And again, the bank is working with, or the company's working with banks like Morgan Stanley and Goldman Sachs. What are the options that these banks are laying out for the company?
Yeah, and I think just at the top, I think it's good for us to note that Goldman and Morgan Stanley have been Intel's advisors for a long time. They took the company, they've been around. They've been around the block. They know a lot.
Long relationship, know the company.
Yeah, exactly. And I think some of the things that they're talking about with Gelsinger and the board would include things such as a split of foundry and the product design unit. That would be
meaning
huge,
separate companies.
A separation, yeah. So being run, it could end up being a spin-off.
Why is that a good idea?
I think because Intel has seen pressure in recent weeks and months around this idea that the turnaround, the costs required for the turnaround in and around manufacturing itself of the actual chips is costly. One fab that they're taking money for takes about $20 billion to build.
I got to tell you, I'm just, you say too big to fail in the context of companies that we've talked about recently. Boeing is a company that has been talked about as being too big to fail. Instead of spinning off, they're consolidating, bringing back Spirit Aerosystems, a company they spun off 20-something years ago. It just seems like, would these moves fundamentally change the fate of Intel? Or is it financial engineering?
I think it would, because you'd essentially be looking at, with a split of foundry, you'd essentially be looking at a company that's only focused on the product design, which i.e. the chips that you might find in a Dell computer or in a Lenovo computer.
So they wanted to be more like a TSMC, right? Making chips to be a foundry.
That was key to Gelsinger's view, is that they wanted to rival TSMC. That so far, investors aren't convinced. Intel is still the only customer of Intel's foundry business.
Right.
Which, the challenge so far has been, how can we get chips out the door at a fast enough rate for other customers that aren't us?
So if they do that, what's left in terms of Intel, their secret sauce, or their chips that they are making? It's interesting in a week where we focus so much on NVIDIA. Is that enough of a business? Is that a better business? I understand it'll be more of a pure play and not all the costs of building out foundry. 30 seconds here. Is that enough of a business?
It is, because you'd essentially be looking at something that, where they've lost ground to the likes of AMD and around GPUs and CPUs, they could focus more time on the data center server type area.
Well,
and that's huge.
Investors are buying in today. Intel shares are up about 7% as we speak, but let's not talk about where they are year to date because they're down a lot. Ryan Gould, thank you so much. Deals reporter, Bloomberg News, a Bloomberg exclusive. Read all the deals. Just head to Bloomberg.com or check it out on the Bloomberg terminal.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, we're going to talk a little bit more about what's going on in the markets, Fed expectations, because it does feel like the inflation report, the preferred inflation gauge of the U.S. Central Bank, coming in, we're still seeing consumer spending, inflation cooling. It does feel like Jay Powell's got to feel pretty good going into this Labor Day weekend.
Somebody who watches this stuff so closely, the macro and the micro, is Ben Emons, founder and chief investment officer at FedWatch Advisors. He joins us from Washington, D.C. Ben, I think you write more than some journalists I know. How much of your day do you spend writing?
I spend, I think, probably a good 80% of my day on that. Just like I'm just this addicted writer. I think I listen to you and Carol and John and other people, and that actually is always a really good inspiration for writing. Obviously, checking numbers and markets, and it's just enjoy doing it. So. It's always focused on analysis, right? It's always focused on trying to come up with another angle to the story, like what we're looking at now at PCE, and try to drill in and try to come up with practical ideas about it. And then obviously extrapolating that to what I do now, I decided to set up my own firm and really focus on Fed watching and making that more like an investment firm around Fed watching and apply that writing. And as a last point there, I do want to say this. As you know, I used to work for Bill Gross at PIMCO for many years. He taught me actually this. He did that himself too. He was one of the most prolific writers too. He would always tell you, write out your thoughts, because that gives you really the sort of your let's say compass to navigate these markets.
I do think that there's something really healthy in also, like, we joke about putting your phone down or sitting and writing something and just walking away from the day-to-day barrage or minute-by-minute barrage of headlines and statistics to try and just kind of think about where we are in a sane way.
Well, Ben, there's a synthesis that happens when you sit down to write about something. I learned this in high school. I think one of my teachers said, you don't really know something unless you can explain it or you can write about it, Ben. And that's what you do with your notes, and that's certainly why I appreciate getting them pretty much every day. Just to give you an idea of the types of notes that Ben's written recently. He's written about the data center surge. He's written about NVIDIA's economic impact. And I know he's listening to our show because he forwarded me the NVIDIA economic impact note after we were talking about NVIDIA's economic impact on our program a couple days ago. The uncertainty when it comes to IPOs, reflation when it comes to shipping, and of course everything happening last week at Jackson Hole.
Yeah, exactly. So let's start with NVIDIA, because it has been, we even kick off our weekend show saying, listen folks, there was one story pretty much this week, and that was NVIDIA's earnings. How do you extrapolate that out, not only to what it means for NVIDIA specifically, but the AI race, the AI build out, and what it maybe says more broadly about CapEx spending and I don't know, and what it means for financial markets when that big, tech trade means so much.
Yeah, that's right, Carol. I think that, the Wall Street Journal had a nice graph on that showing all this tech spending and the projection of it. And it's all based on NVIDIA, literally on expectations on how NVIDIA will perform from here, because they have the monopoly on those GPUs and chips and Blackwell and all the things that they create. And yet, as they create those chips, as we now know, there's on the ground all these data centers being set up across the country. And that was one of the graphs I put in the note, all those bubbles out there. And that's not just a data center that I guess I want to visit one of those actually. It's kind of interesting new concept, but there's a lot of people who start working there. There's a lot of services that then happen around these data centers. So NVIDIA has become a major macroeconomic force, in my view, where you could talk about the stock and the multiple and the earnings projections and all those things and everybody in the bar in Manhattan was very excited about that. But me as an economist, Fed watcher, I think of it, this is a company that's become very powerful for the economy, that if its performance were to change and the expectations about its growth changes, that could have an impact on the economy in itself. It's like Boeing with its impact on the supply chain. When people have calculated that it's worth up to 0.5% of GDP, I think NVIDIA could be actually more impactful that way.
I think about that, those data centers that are the big build out, right? And do we all of a sudden, maybe in a year or two, are they not actually operating? Are they a little quiet because maybe the reality doesn't live up to the expectation? So that's certainly top of mind. The other thing is we got to talk politics.
Yeah, I don't see a recent note, Ben, that you have about this. You had something about Harris a couple of weeks ago. It's coming. Okay. Well, here's what I want to. Let's get a little preview from you on this, because Bloomberg News Morning Consult poll came out late yesterday, shows that Kamala Harris has sustained the burst of momentum she brought to the presidential contest. She's leading or tied with Donald Trump in each of the 7 swing states most likely to decide the race. How do you think about economic policies under a President Harris versus a President Trump?
Yeah, the first thing you think of is that, okay, she just extends what we've been doing so far with Biden. And yes, the Infrastructure Act and the CHIPS Act will not be disrupted, right? Which is, I think, back to the NVIDIA story, an important aspect, because there have been slowdown in some of these chips activities recently, meaning there's a lot of semiconductor investment that's happening in the States, but some of these projects have been put off. The Financial Times report on that. So that's key, I think, because from an economic policy point of view. Then, of course, everybody looks at the Federal Reserve and its independence. You will not rail against that. I think for the broad markets, that probably matters not as much. It's more about then further down about how are you going to go after people with higher taxes, right? Are you really going to increase capital gains taxes and wealth taxes and that sort of discussion? And I think lastly, it's really about her own agenda in terms of like how she's shaping it. And we're getting some contours of it. She does seem to be in favor of fracking, for example, which matters to energy supply. And she is going to address the border, which could affect immigration flows, right? So I think if you take all those things, her agenda is the extension of Biden, but it is her own agenda. But the most important thing for me, at least, is I think that if there's no disruption in what the Infrastructure Act and CHIPS Act are doing to the economy, that will matter a lot, because that's really been a big driver, I think, for economic performance over the past year.
Listen, I think about, Tim, the conversation we had on Bloomberg Business Week with the Wyndham Hotels CEO, who said some of their development, especially for extended stay hotels, was specifically tied to some of the congressional spending plans that have come from the Biden administration. In other words, whether it's infrastructure or so on and so forth, that places are building out, companies are building out throughout the nation, Texas
He joined us
specifically.
from Frisco, Texas. Yeah, you're talking about Jeff Bellotti, who was on with us last week or the week before.
Right. So what you say in terms of these plans, whether it's data centers, AI, whether it's climate change, renewable energy, these spending plans are certainly key in terms of economic growth and keeping kind of the engine going. Having said that, what is the one political policy, whether it's Donald Trump or Kamala Harris in the White House come November, that you think is going to be very important to keeping the economy in a good place here in the U.S.? And just have about 40 seconds.
Yeah, it would be the debt ceiling negotiation and how fiscal policy will be shaped into 2025. Because remember, the debt ceiling negotiation last year had a 1% sequestration attached as part of the negotiation. Will that sequestration, which is a spending cap, will that be like what we experienced in 2011-12, like a larger one? Because if that's the case, that would have a significant impact on the economy. Doesn't seem that that's the case, right? That both want to spend more. But that is a really important aspect, I think, of as we go through the election. How will fiscal policy play the role in the economy?
Yeah, and as we know increasingly from guests, it is an important one. We've talked about it in the past, but it's a much more, in terms of the deficit and so on, it's going to be potentially more problematic. Ben Emons, thank you so much. Keep the notes coming. Founder and Chief Investment Officer at FedWatch Advisors, joining us from Washington, D.C.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Kailey Leinz, she's Balance of Power co-host. She's joining us from Washington, D.C. Kailey, we've been dying to talk to you since I saw these numbers come out late yesterday after our show got off the air. Kamala Harris sustaining the burst of momentum she brought to the presidential contest. She's leading or tied with Republican Donald Trump in each of the 7 states most likely to decide the race. New numbers from Bloomberg News and Morning Consult. Give us the lay of the land and how this latest data change the next few months.
Well, really what this data illustrates, Tim, is that the map for Kamala Harris, basically the number of states she could potentially win in order to secure the 270 electoral college votes she needs to clinch the presidency, is significantly wider than it was for Joe Biden. And these figures do confirm that, as you said. In 6 of the 7, she is leading Donald Trump. In fact, while a lot of these are within the margin of error, in Wisconsin, one of the key battleground states, part of the so-called blue wall, she's up by 8 points. And even in states where we almost were no longer even considering them swing states, like North Carolina, because Donald Trump's lead has been so significant. She is now up on Trump in North Carolina by 2 points. She's also up by 2 in Georgia. She's up by 4 in Pennsylvania and Nevada and 3 in Michigan. So by and large, this does show that while this race remains incredibly close, she does have potentially more chances. And that also means that it's more areas in which Donald Trump and the RNC are going to have to dedicate resources and spend time campaigning in areas that they once thought were givens for them, much safer, may not have had to invest as much time and energy. They now may be forced to do so.
So help me out here, Kailey, as the days, I feel like the days are numbered now as we count down to the November, actual voting, although we know people can vote earlier. Having said that, polls, how much do they bounce around, especially as you get closer and closer to Election Day?
Yeah, a lot of strategists will tell you, Carol, that you shouldn't really look at any polls before Labor Day. However, the campaign is much more aggressive pre-Labor Day this year than we have seen in the past, just given the truncated nature of the Harris-Walz ticket here. Of course, they only became the ticket just recently, and she's only been in this race as a presidential candidate, not vice presidential one, for about 6 weeks. So we will look to see how things morph, especially after the debate on September 10th. That is going to be potentially a critical, pivotal moment in this campaign when we see Donald Trump and Kamala Harris sharing the stage. And of course, we'll expect to hear more sit-down interviews, frankly, from the both of them. Kamala Harris, of course, did her first last night on CNN. Interestingly, she said on day 1 of her presidency in that interview, the thing she wants to focus most on is the middle class. And in this poll across the swing states, it actually finds that swing state voters give Harris the advantage on who they trust more to help the middle class by a margin of 7 points. It's interesting to see her performing better on some of these economic questions than Joe Biden was.
Do you feel like, though, I felt like it was to some extent a repeat of some of the main issues or main things she brought up in her speech at the DNC. And I do feel like we want more specificity, although I'm not quite sure we're going to get it, because that can get you into problems the more specific you get. The devil is always in the details.
Yeah, that's exactly right, Carol. Clearly, us journalists and our audience here on Bloomberg Radio probably wants the policy specifics, right? What are the exact pay-fors for some of the things she's suggesting, like $25,000 down payment assistance to first-time homebuyers? And we didn't really get that last night. It kind of still was these broad ideas of wanting to help the middle class and create an opportunity economy. And she didn't also shy away from a lot of the work that has been done in the Biden administration when it comes to the economy, things like the Inflation Reduction Act and the infrastructure bill, that kind of thing. But I think what was one of the more interesting points of the interview was she was questioned on some of the policy areas in which she has flip-flopped, like a ban on fracking. She made it very clear last night that she would not seek such a ban as president, even though she said she was in favor of it when she was running in the Democratic primary back in 2019. And her explanation for that, as well as some pivots in policy she's made when it comes to the border, is that her values remain the same, even if her policy ideas have started to change. And the values argument will have to wait and see if voters truly buy. Republicans don't really seem to be doing so.
I also wonder to what extent, the flip-flopping, so-called flip-flopping matters in the context of her opponent, who has been on several sides of both sides of several issues too. So I don't know to what extent that matters to voters, especially given, it was 5 years ago in some points.
I have to say one thing, right, and I think everybody's been highlighting as new. I watched it all, and I thought it was very earnest and honest when she said, yeah, I'd be up for having a Republican in my candidate.
Yeah.
Like, if you embrace diversity, which she does, she's going all the
Clinton
way with
did it. Obama did it.
Yeah, I think it's smart. And I know we're not supposed to weigh in on it, but we as an organization embrace diversity. So it's interesting to see her come out and say that.
Yeah, for sure. And I would point out at the DNC in Chicago, where I was last week, even though it already feels like it was months ago, there were a number of Republicans who spoke on the stage. Adam Kinzinger, the former congressman, Jeff Duncan, who was the lieutenant governor of Georgia, who are, of course, not pro-Trump Republicans. They're, in fact, very anti-Trump. But they were there at the Democratic National Convention. And it'll be interesting to see if it's those types of individuals she's thinking about potentially as cabinet potential candidates for a cabinet position. She, of course, didn't name names last
Hey,
night.
Kailey, we only have like 10 seconds left for this, but now that we got an interview with Harris on CNN and Tim Walz as well, are we going to start to see them do more media?
Yeah, we can expect that, and probably doing them solo, Tim, rather than joint interviews like we saw last night.
Although I thought, Tim, it was interesting to see the two of them. I'm waiting for the 60 Minutes interview like that. Or the Bloomberg interview. Come
That's
talk
right.
to us. All right, Kailey Leinz, thank you so much. Really appreciate it. Balance of Power co-host joining us there in D.C.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Dell shares are higher. The company did report better than expected revenue due to an increase in the sales of servers built for handling AI workloads. We got with us Jin Ho, Bloomberg Intelligence senior tech analyst. He's here joining us from Princeton, New Jersey. Jin, give us the high level, and then we're going to get to the various notes that you wrote about Dell post earnings. Give us the high level recap of what we heard from Dell last night.
Sure. So the big lead into the print was AI server margins, or ISG margins in general, and the beat there was 11% ISG margins. Last quarter, they did about 8%. From a revenue basis, there was a 4% revenue beat, principally driven by AI servers. They did about $3.1 billion in AI server revenues, and I think the consensus was around $2.4 billion. So that's where the upside was. There were some, negatives. The PC market isn't going as well as one had hoped, but it seems as if the street is overlooking that a little bit. But all in all, AI is doing fairly well for Dell.
Jin, you mentioned PCs, AI PCs. You know this. We spoke to John Rose earlier this week, and also, can I just say,
What?
We got some great questions from our Bloomberg Intelligence team ahead of that interview.
For John?
Oh,
yeah. And he's right in the thick of it.
He's right in the thick of it.
So
but one
great.
thing that we asked about, Jin, was about AI PCs. Is this something that there's promise in, that we're going to be using PCs that are equipped for AI, or is this stuff going to be on our phones? Like, is Dell right in thinking that there's going to be a big market for AI PCs?
Well, I don't think there's going to be a choice, Tim, primarily because Intel, AMD, they're all making AI PC chips. And Dell, HP, Lenovo, whoever the PC OEM is, they're going to put them in their PCs. Now, are they going to charge a premium? A slight premium, right? But like it or not, we are going to have an AI PC. The better question is, are there going to be apps that's going to help support the power of the AI PCs? And that's the $100,000 question that I have right now. The big uptake is probably going to be more on 2025 as a driver, calendar 2025 as a driver, than on 2024.
That's because I keep thinking, why do I need an AI PC, or will I need it for work?
Oh, Carol, you will need it for work.
Okay.
Just imagine the amount of time that you spend on your emails just to catch up on emails. Imagine once you open up your PC, it'll create a dossier of all the things that you need to do, all the questions that you need to have ahead of all of your interviews, right? All on a single page.
When? Tomorrow? I guess tomorrow's Saturday. Tuesday when I'm back?
Well, AIPC could probably expedite that, but let's see what Microsoft does or any other.
Will it help them focus?
What are you saying? We're focused.
Productivity.
Wait, what was that?
Productivity. It's all about productivity.
But so that's practical. Like Tim and I kind of joke about it, but we do think, wow, boy, it would be great to have something, just write some of our introductions or suggest some questions. When will it be reliable though, that we can trust it? I'm a little nut about the source of things and, making sure it's accurate.
Accurate. You are accurate with that statement.
Silly.
Still unclear when we'll get there. But given how powerful these large language models have become, I do think that it'll be relatively soon. Maybe back half of 25 and 26, we'll start seeing a proliferation of applications to help support the AI PC movement.
What's going to be the learning curve on that, Jin?
Should be fairly quick, right? It's almost like a search engine, let's just say. But once we learn the AI PC language prompts or the Copilot language prompts, I wouldn't be surprised if the learning curve is fairly easy.
You keep making references to Microsoft. Is Microsoft going to be the big beneficiary of developments with this AI hardware?
Well, they're already in there, right? If you think about what Microsoft has done with Copilot and integrating with their Office suite, they've made a big push. And keep in mind, they have a big investment in OpenAI to help support that, right?
Sometimes I think about
$10 billion.
Dell's history, and it's pretty remarkable. I mean, this stock's up almost 50%, 50 year to date. It just feels like it has, reinvented itself a little bit.
No question.
It's remarkable where it is.
You talk to someone around my age,
right?
and you talk to them about Dell, and they associate it with that ad campaign that was out like when I was in junior high. Like, dude, you're getting a Dell, right? The competitor. Right. It could have had the fate of Gateway. Let's just say that. Right. Like Gateway and Dell were the big players, Jin, 20, 30 years ago.
Yep. And look, Michael Dell has done a fantastic job in reshaping the company from a PC maker to a general enterprise or corporate IT maker, and now it's reinventing itself as an AI server maker. Now, keep in mind, if you think about all the AI server makers in the world, there's only Supermicro is probably leading the pack. But if you look at the AI server revenues that Dell has, it went from $1.5 billion last calendar year, and it's on track to do about $10 billion in AI server sales in this calendar year.
So Supermicro's woes, do we have to be worried about Dell at all because of that? And just got about 25 seconds.
Yeah, quick recap. From a financial standpoint, no. The earnings report kind of helps us out there. Supermicro's margins were down on a sequential basis, but Dell's margins were up, and that kind of swept aside those concerns.
All right, cool stuff as always. Listen, thank you so much. Always love checking in with you. Jin, have a great weekend. Jin Ho, he's Bloomberg Intelligence Senior Technology Analyst, joining us, from BI headquarters in Princeton, New Jersey.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So let's talk a little bit about the labor market.
Yeah, the U.S. labor market is expected to grow by 0.4% a year through 2033. It's less than 1/3 of the pace in the preceding decade. That's according to new projections from the Bureau of Labor Statistics. Numbers, it translates to 6.7 million additional jobs over the decade, or about 55,000 a month, the BLS said in a report published on Thursday. For more, let's get to Robin Erickson, Vice President of Human Capital over at the Conference Board. Robin joins us from Chicago. How are you, Robin?
I'm terrific. Thank you, Tim. It's great to be here.
Well, thanks for joining us. 55,000 jobs a month. That is a far cry from the several 100,000 jobs a month that we've been accustomed to over the last couple of years. Do you expect it to moderate as much as the BLS thinks it will?
I do, because I think that the advances in AI are going to change the jobs that we have. If you think about the jobs in 1920, 100 years ago, 30 to 40% of the U.S. workforce was in farming and 30% of the workforce was in manufacturing. Today, only 1 to 2% are in farming and 8 to 10% in manufacturing, while 80% are in services. So I think it's a good thing, but I do think that organizations have to be thinking about reskilling their employees.
So some jobs go away And then is there an equal amount of new jobs that are created that reskilling can help those people who lose their jobs because of AI can now fill? Or are they going to be completely different? Okay.
Yeah, I think the jobs will be different. And I think that we have to think about jobs differently, just like if you were living 100 years ago, you'd have to think about jobs differently if you were transported to 2024.
So how ugly, though, or uncomfortable is that labor transition going to be? So I understand you could do reskilling and get people to fill some of those newer jobs that are now needed, but sometimes I don't know, like how uncomfortable might that be? Especially if you're somebody who loses the job.
It is painful. And one of the things that we found is that only right now 21% of U.S. organizations are thinking about reskilling jobs. So it takes a while to do that. And so we definitely think that organizations should be doing more of that now. But part of the challenge right now is just making sure that everyone has some AI literacy. And so that's another area that we suggest organizations focus on.
Robin, does this mean we're going to work less in a few years? Like a 4-day work week? Steve Cohen is investing in...
Could you work any less?
Wow.
You had that coming.
John Tucker's so rude. You know, I'm working double duty today, John.
Exactly. That's tough.
The world's smallest violin comes out.
Okay. All right. Enough from you. Can we turn his mic off?
Yeah.
Robin, I'm more interested in what Robin has to say about this. Truly, though, the reason I ask is because Steve Cohen and co are investing in golf because they argue that, you know, we are going to be working less and playing more golf.
Not at his firm necessarily.
No.
But
others.
Elsewhere.
Thank you.
Yes.
Elsewhere. What say you, Robin?
So I'm smiling because you might think that we're working less now than we were 100 years ago. But because of technology, we can work 24/7. And so I do believe that there's a huge risk of burnout if organizations expect their employees to work all the time. So at the same time that organizations are thinking about doing more with less, fewer people, you know, we actually found in our most recent survey that 45% of organizations said that they had restricted hiring in the last 6 months. They'd reduced travel. 30% said they'd done layoffs. So there's a lot of cost-cutting measures right now.
You know, it's so funny. Sorry, I'm going to go to a little bit of an aside, but there was a great story on the Bloomberg this past week about this mining billionaire who banned work from home, and he's targeting coffee runs.
But wait, this is a really interesting story.
I know.
But it makes sense.
Chris Ellison, his mining company, they've already been banned from working from home. And
this sounds great.
Why? Tell me. What do you mean?
Wait, how do you work from home in a mine?
No, not talking about the miners. It sounds great because I don't have the story in front of me, but if I recall correctly, he wants to provide everything for employees that they find off campus, including daycare.
Yes.
Daycare.
He talks about the
That
perks.
sounds great.
They're going to bring the kids into the mines?
No. You got to get them started early.
Play over there with that coal.
Robin, we're so sorry we're doing this, but it was a fascinating story. This guy, Chris Ellison, they're in Perth. Mineral Resources is his company. They have a cafe, a restaurant, a gym, a creche, a reflection room.
I'm told by Elizabeth Sedgren a creche is a daycare.
Oh, is it? Okay.
Yeah.
A wellness center. And he says a 67-year-old mining veteran said that staff loved working in the building and its facilities kept them glued there. I have a no work from home policy. I wish everyone else would get on board with that. The sooner the better. What about balance? Whatever happened to that?
So one of the things you might not know about mining companies is that typically you don't have mining facility in a city, right? So these mining or facilities are oftentimes in company built towns, like literally. So there's a mine and they'll build the town around it. So really, where could you go? But haven't we seen this before? Didn't, a big technology company try to do this with a campus and try to keep workers there 24/7? We've seen it before.
He is offering, though, the daycare center would charge just in U.S. dollars, $13.58 a day compared to external costs of around, this is Australian dollars, $180 a day. So
yeah, it's
20 Australian for them.
Let's just say daycare in the U.S. is thousands of dollars a month.
Labor market, one of the things the Fed watches so close.
And you know
go ahead.
I was just going to say, the more that an organization can offer to their employees, the more likely that they are to be able to attract and retain those employees. So I think providing on-site daycare is fabulous. I think providing more well-being programs that work. But I also know that employees right now want flexibility. We did a survey.
Oh, interesting.
Shocking, I know, we're a think tank, but 65% of workers said that beyond a competitive salary, flexibility was most important to them. And what happened during COVID was that everyone had to adapt, right? And it was hard. Remember those lockdowns and the quarantines? But workers experience more flexibility in their personal lives, and they want that flexibility.
I'm going to do a Twitter survey or X survey, flexibility or more pay. I want to see what people say. Robin Erickson, this was fun. Vice President Human Capital for the Conference Board, joining us there in Chicago.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.